Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode number 228, 16th of May today. So we're basically trying to prepare for a fall, and I'll explain how momentum strategies try to prepare for a fall, whether they're absolute momentum strategies or rotational momentum strategies, and how different the approach is. And what we have done so far in the strategies. I'll go through that. So, but let's come back to the market. So, a relief day in the markets today. PSU banks leading the markets at plus 2.9%. Real estate stocks, autos, private banks, public sector enterprise, they all were bouncing from the immense damage that has happened in the last month or so. Other sectors like IT, FMCG, pharma, the defensive sectors were notably in the red today as they were less damaged in the last 1 week also. Nifty closed plus 0.38%, so not any significant bounce as well. And infrastructure stocks, commodity stocks, consumption stocks are mildly up. So nothing great in terms of the bounce. And what we can see is that the market is considerably under pressure, and as of right now it doesn't seem like we are going upwards on a shorter term basis. It does seem like the trend remains on the downside. In terms of internals, Nifty Next 50 was the best performing index within this list, primarily to do with Adani winning the Holcim deal, the acquisition of Gujarat Ambuja and ACC stakes, and several Adani stocks were doing well today. Small caps also were bouncing a bit at plus 1.3%. Mid and small cap similar. CNX 500, CNX 200 were also mildly up at 0.7%. Within the weekend investing small cases, MI20, MI35, and NF10, all three of which are rotational momentum strategies. So they basically remain fixed in terms of number of stocks in the portfolio, never go to cash. Remained between 1.5 to 2.8%. In fact, EverGreen also, sorry. So all four are rotational in nature. EverGreen rotates once a month, and NF10 also rotates once a month. MI20 and 35 are weekly rebalanced. Then MI50, MI25, LTCNX 200 all were up between 0.5% and 1%. And then some strategies, ATH, ATH2, which have largely gone to cash, hardly had any gain. So in terms of the absolute momentum strategies, the cash is between 40 and almost 75% now. I think ATH and ATH2 have the most cash in hand right now, and MI25 also has reasonably good cash levels. In terms of market gainers in CNX 500 universe, LG Equipment up 16%, Ratan India 15%, Vodafone on stake acquisition up 12%, CRISIL plus 12%, Vinity Organic up 11%. On the other side, Amber Enterprise, a stock that has been doing very well in the last 2 years, has suddenly collapsed, minus 20%. Previous special, this has again down 10%. This has also hurt several of our portfolios. Very sharp fall in this, but I think most of the portfolios are now out of it. ABSL down 7%, DCM Shriram 7.5%, Affle India, another big flyer from last 2 years, down now at near 1,000 rupees at minus 6.5%. So the damage in a lot of stocks is very, very high, and there is all the more reason for you to have some strategy where at least we should be able to get out of very weak stocks and gradually rotate into more stronger stocks. Uh, what we have seen over cycles is that every cycle has different leadership, and if you had held, let's say, .com or IT stocks in 2000 2001 fall, then they didn't do anything till the next 10 years. So if you did not get into infrastructure stocks, real estate stocks in that 2003 to 2008 period, the portfolio would have suffered. Then after the 2008 fall, had you stayed in infrastructure, real estate type of stocks, then till very recently there would not have been much gains in your portfolio. So if the leadership kind of rotates, then FMCG stocks did very well after 2008. So the leadership keeps rotating, and the only way to sort of keep pace with the index, because index itself is a momentum strategy, as I've several times alluded to. So index will keep moving up gradually. As soon as stocks start to underperform, the 6 monthly index rebalance, if I may call it, will throw out the weak stocks, bring the new stocks in. But your portfolio may still hold those stocks from yesteryears which you have bought at a high price, and you may be waiting for that price to come. So it requires some active management for you to stay with the strength in the market. Yes, there are maybe some stocks which after a lull of 6-7 years may come back up again. Levers has done that, Reliance has done that, Nestle has done that. So there could be a strategy to sit on it for 2 decades and get that same return. It's possible, but psychologically and from a purely from a investor perspective, not everybody is suited for that game. So we want to today highlight how momentum strategies prepare for a fall or how they are set up. So I'm just showing you, let's say there are 2 strategies and they delivered the same return during Feb 19th till from Feb 2019 till Feb 2020. So 2 strategies, same return till here. Then one strategy B, had a drawdown of 40%, and strategy A had a drawdown of 20%. So in this small 1 month, 2 month period, the 2 strategies diverged massively. One strategy fell 20, the other strategy fell 40. And then from April 20 till today, also the return was similar to each other. So just because of this difference of 1 month here, just see the final outcome difference. One strategy achieved plus 242, the second strategy achieved plus 157, just because the strategy A was able to reduce its drawdown here. Everything else remaining the same. The starting first half, 1/3 was same, only the drawdown was different, and the last 1/3 was same in the 2. I hope I'm able to convey what I'm trying to say. Is that all this entire period, only this period was different between the 2 strategies, and that's what caused a huge difference at the end. So the effort should be to try to reduce drawdown as much as possible, so that you have a lower drawdown and higher base to build back the strategy from. This is again showing the same thing versus MI 25 versus small cap index. So here the previous example was a generic strategy A, strategy B. This is actual what MI 25 did. So this 2018, 19, 20 period was reasonably bad for small caps. Minus 55% for the small cap index and minus 28% for the MI 25 small cap smallcase. So huge difference in the drawdown. Now post that period, let's say they both did the same, and they actually did the same post that period. So overall impact was, because of this smaller drawdown here, your overall impact became plus 113 versus 31. I mean, huge difference because you were able to curb some drawdown over here. So, two ways to make oversized returns. One is outperform when the market is going up, and two is try to outperform when the market is going down. So, market goes down, we want to try and reduce the damage. Market goes up, we want to at least maintain the same pace or better than that. So, two ways which will come together and give you that multiplier effect on the whole performance. So now we run two types of momentum strategies. So this is wrong. This is absolute momentum strategy and this is rotational momentum strategy. So rotational momentum strategy, 20 stocks for instance, they will stay with the strongest 20 in the pack of let's say 200. If you're looking at CNX 200, rotational strategy will take the top 20 ranks, and then every month or every week the rules of the strategy will determine whether some stocks will be moved out and some stock will come in, but the best strongest stocks will remain in your strategy and they will never go to cash. The advantage of this rotational strategy is that you're always in the market. So technically there could be a way where we go to cash in the absolute strategies, and let's say next 2 days the market hits two upper circuits, something happens, the strategy will just miss that entire move. So while the disadvantage in rotational is there that there always will be exposure, but what happens is that exposure moves from higher risk to the stocks or sectors which are defensive in nature when the market falls. So when the market is falling now, in rotational strategies, it will gradually move into public sector enterprise, it will gradually move into maybe IT, pharma, FMCG, so on and so forth. And when risk on picks up again, it will again move into metals or commodities or things of that nature. So that rotation keeps happening over time, and so that you are always with the strength of the market. Yes, if the market like 2008 Nifty fell something like 68%, then rotational strategies will also fall somewhere close to that, maybe a little better than that, but will fall quite sharply. The advantage is that when you have that minus 65 trough and you're coming out of that, absolute strategies will not have anything on their portfolio. They will just sit on cash till a significant time. The trend is formed. Maybe 6 months later into the trend, some stocks will start to appear in your portfolio. Whereas in rotational strategies, from day one of that rise, you will start getting the gain. So deeper cuts, yes, but faster recoveries and more time in the market, so as to say. So the second type, of course, is the absolute momentum strategies. I am hiding this because this was written wrongly. They move to cash, like for instance MI25, MI50, MI80H, MI80H2, MI30. All these are absolute momentum strategies which will move to cash depending upon each stock in that strategy fulfilling certain exit criteria. And as the market weakens, gradually the strategy keeps going to cash. So currently most of the absolute momentum strategies are between 45-50 to about 70% cash now post this last week of drubbing. So while we are down 15-20% on average from the top, let's say if the market drops another 10% now, then these strategies will get saved from that huge drawdown to some extent, or to a large extent actually. So the idea is to try and prepare yourself for more drubbing, because that's the only way you can sort of lower the risk and try to lower the drawdown. Yes, it will not work every time. Maybe sometimes the market will drop 20%, you get out of the stocks, and the next day it hits an upper circuit, government abolishes income tax or something like that. So there's no holy grail as such, but over several iterations of several cycles over last many decades, this has worked very well, and there is no reason to believe that it won't work in the future. So, but you need to stick to discipline and stick to the strategy. So either way, both strategies do well over time. Absolute momentum strategies have go to cash. The rotational momentum strategies churn within the group to go into defensive and more stronger stocks in that period. So just wanted to briefly touch upon this boom and bust table which Charlie Belelio has put up on Twitter. He's a phenomenal data analyst, and we are frequently taking his data to showcase that the kind of moves. If you go through this list, there are several very popular names. I can see Peloton here, which was up 434% in 2020, is down 91% from that top, from 2021-22. Then you have Zoom Video up 400%, minus 73 now. Then I can see, maybe Tupperware brands plus 300%, minus 74 now. Pinterest up to 254, minus 68 now. More DocuSign, 200, minus 69. And just look at the damage on several of these companies. PayPal doubled, then goes minus 66%. Wix.com plus 104, minus 70. So essentially the point is that we need to have strategies which will not only allow us to get into these front running stocks, or I shouldn't call it front running, but high return stocks when the going is good, at the same time not give up the entire gains when the bust happens. So like all these stocks in these lists, I mean, if it was not less than, if the gains was less than 200%, you are already in the red, even from day one. So 90% drop from any level actually will put you into a negative situation. So we need to have some strategy where this, crazily down, large drawdown in a stock can be controlled. Maybe 20%, 30%, 40%. Somewhere you need to get out if it's going to minus 90. Because minus 90 means that you need a 10x to come back to capital. So the purpose of showing you this is that very good names, quality companies also go through the same boom bust cycles, and there is no way to say what any stock will do, what news will come out, what that industry will go through, what the management may do, what may be a scandal there. So you can't risk it out. You have to have a methodology that is systematic and keeps you emotionally sane in all this. So if we have been seeing from March 2020, some strategy went up, let's say 50% first year, next year 40%, and now it's down 20%. In the overall picture of the cycle, we are still up quite a bit. But yes, if you have come at the reasonably towards the top of the cycle, then yes, we are down negative. So I hope the point is getting across that we need to appreciate and understand the role of a strategy, role of risk management, role of having exits. Whether or not you're doing weekend investing strategies, I'm talking in general. Even if you're doing value investing, you must have a structure, exit criteria, and a way of conducting your portfolio so that you can retain some of your benefits that you have in the upcycle. Nobody can buy the bottom and sell the top. So if you make any money on any stock, you will lose some of it, but you don't want to lose all of it or most of it. That's the whole point. So I hope this was somewhat educational. Please do share with your friends and family. Please subscribe to the channel and keep sending in your comments. I'll see you in another video. Bye.